Good morning and welcome to Stock Market Today for Tuesday, July 16th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email. Follow along with this show. Get daily stock ideas for you to consider every trading day before the market opens. It hits your inbox. So U.S. equities were mostly higher, but little changed overall in quiet Monday trading. Treasuries were stronger following last week's backup in yields. Dollar was stronger versus the euro and sterling, but little changed on the yen cross. And that kind of lines up with the trading activity that we saw in equities. Gold finished up 10 basis points and WTI crude was down 1%. So earnings season really ramps up this week. And we're paying close attention to the banks to see if they can begin to move higher and drive out performance by the financial sector. Your outperforming sectors yesterday: utilities, consumer discretionary and tech, energy, financials, and industrials underperformed. As we get to the desk this morning, futures are flat after U.S. equities finished mostly higher on Monday. Asian markets were mixed overnight, as are European markets here this morning. Treasuries are unchanged. The dollar is stronger on the euro and sterling, but flat against the yen again. Gold is up 20 basis points, and WTI crude is seeing a little bit of a rebound, up 30 basis points to get things going on a Tuesday morning. Here's your chart of the S&P 500, fresh new highs. We also saw new highs for the NASDAQ and the Dow yesterday. Support for the S&P 500, 2,900 to 2,950. No price-based resistance as of yet, with the market trading at all-time highs. At some point, we'll start to carve out some resistance levels, but with the market at all-time highs, we're not there yet. RSI confirms this breakout and strength in price as it has reached overbought levels. RSI ticking above 70 once again, and Chaikin money flow is now bullish for a second day in a row. After dancing with the zero line, really kind of the one thing that was giving us a little bit of pause on the market, but we'll wait to the evidence approach called for being bullish, and that is what we were, and that is what we remain. So the process remains the same. Look for very bullish and bullish stocks in leading sectors and industry groups, and look for those stocks when they become oversold, preferably with bullish money flow. And today is Tuesday, so we'll dive in on our sector work a little bit later in the show. Our market in a minute. What are we talking about? In the note today, to Chaikin Analytics clients, stocks extend move to all-time highs. We should caveat that by saying with the exception of small caps, right? Dow, S&P, and NASDAQ at all-time highs. Small caps just refuse to join the party, and we'll take a look at that again in just a moment. Defensive sectors have come under pressure in the near term. If we look at some short-term trading, utilities, REITs, staples, and healthcare have all come under pressure of late, seeing a rotation or a more aggressive move into some of the cyclical areas of the market. I think that ultimately that bodes well for the equity market. We do have fresh breakouts, speaking of strength in the cyclicals, fresh breakouts in technology and discretionary. Again, we're asking, will earnings be the catalyst for financial outperformance? From a power bar perspective, i.e. the fundamentals, the financials are one of the stronger sectors within Chaikin Analytics, but the market's just not there yet. Group refuses to outperform. We wonder if bank earnings can be a catalyst. Citi beat yesterday. Stock was slightly weaker, and JP Morgan looks to be trading a little bit lower here this morning. Futures do point to a flat open. Power bar perspective for the major indices, the Dow slightly higher yesterday, 6 bulls to 4 bears. S&P 500 also slightly higher, 140 bulls to 61 bears. So this ratio continues to strengthen for the S&P 500. NASDAQ outperformed, up nearly 30 basis points yesterday. 33 bullish or very bullish stocks, 11 bearish or very bearish stocks. So a 3-to-1 bull to bear ratio there. And here's your small caps just refusing to join the party from an absolute or relative perspective. 548 bulls, 322 bears. So again, we've been highlighting this for some time. We've been talking about it in our notes and in our conversations with clients. When it comes to equity positioning, we favor large caps over small caps. So what does that mean? If you're looking at two stocks with similar attributes and one's a small cap and one is a large cap, we err on the side of owning the large cap. Bonds saw an uptick, a little bit of a rebound, sending yields lower on the day. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Turning now to our stock of the day. Auto-generated by our algorithm based on the Chaikin Power Gauge rating. Virtus Investment closed at 111.35, up 20 basis points yesterday. Power gauge rating for Virtus is very bullish due to very strong earnings performance and very positive expert activity. The financials and the technicals are neutral, but the 20 factors, 5 in each of these 4 categories, when rolled up, come out with a very bullish rating. So we have a very bullish stock with a strong trend and a strong industry group. So we're kind of fishing in the right pond here when it comes to looking for our ideas, but we run through the analysis, and what do we see? We see that the stock is underperforming relative to the market, and there's your relative strength versus the SPY as I've dropped down the checklist once again. All of the attributes of the stocks that we talk about when we run through our analysis every day, we've now condensed for you into this checklist so you can quickly see if the weight of the evidence supports owning the stock. And what I would say is that for Virtus, it does not for the time being. And why is that? Weak relative strength, currently overbought, and money flow persistency is just not there. It's been oscillating between bullish and bearish. So what do we do with a stock like this? We take Virtus and we add it to a watch list. We add it to a bullish watch list, and we continue to watch it. We check on it. We look to see if the stock becomes oversold. We look to see if relative strength and money flow improve, right? We don't want to just disregard it. The stock of the day are a great opportunity to build out a watch list, and then when you're running through your process every day or every week, however that fits in your research process, you can come back to it and see it as a potential idea and see if it makes sense to get involved. Virtus is going on my bullish watch list today, but we're not doing anything for the time being because the weight of the evidence does not support being long. You can actually see it here. The stock has 2 of 3 positive strength indicators and only 1 of 3 positive timing indicators. You can quickly see that with our new checklist. Add Virtus to a watch list. We're not involved here today. Taking a look at our sector tracker now, the movement of the major sectors over the last 5 days. We talk about in our note today, we look at sector relative strength from both a trend perspective and a short-term trading perspective. And what I would say is that across time frames, both longer-term trend and shorter-term trading, tech and discretionary are leadership, and they're in the top 3 groups here. Comms are slowly improving and getting better from a trend perspective. Short-term has moved higher as well. Industrials, energy, staples, and financials are middle of the road. Materials, utes, healthcare, and REITs round out the bottom of the list. And what I will say is staples, utilities, healthcare, and REITs, from a short-term perspective, have come under some pressure. Market is certainly favoring the more aggressive cyclical names as the S&P 500, Dow, and NASDAQ break to all-time highs. Our industry in focus today is really what's been a drag, or one of the areas that's been a drag on healthcare. It's pharmaceutical services, which over the past 6 months has underperformed the S&P 500 by over 17%. Power bar ratio, which measures future potential, is very weak. 13 bearish or very bearish stocks for only 4 bullish or very bullish stocks, and that has moved down 2 slots over the past week. It's currently ranked number 19 of 21 subsectors that we look at. So at the very least, we know that pharmaceutical services is an area of the market that we want to avoid for the time being. If you are so inclined to trade from the bearish side, if you take short positions or use put options to take advantage of potential weakness in weak stocks, in weak industry groups, some of the names you might want to consider: TXMD, Therapeutics MD, has a very bearish rating. Wave Life Sciences, WVE, has a very bearish rating. And Aerie Pharmaceuticals, AERI, also has a very bearish Chaikin Power Gauge rating. So let's just take a look at the industry for the time being. What's kind of interesting to me is the Power Gauge rating has shifted to neutral, right? But that's just one component of the process. Power Gauge rating has shifted to neutral, but the group continues to be a massive underperformer relative to the SPY. So not really an area where we want to go fishing. Approaching oversold levels based on our overbought, oversold indicator, but Chaikin money flow is bearish. Fund is below a declining long-term trend line and in a nice, steady downtrend. So despite the neutral rating, the trend remains weak. It remains an underperformer. Money flow is bearish, indicating that investors are still taking opportunities to sell the stocks in this group and the fund itself. Continue to avoid the pharmaceutical services industry group if you are trading to the long side of the portfolio. Taking a look now at yesterday's S&P 500 movers and shakers. CF adds 3.7%. AMD, part of the semis that continue to show relative strength, up 3.55%. WYNN win up 2.9% on the day. Gilead, GILD, actually triggered a buy signal in Chaikin Analytics today added 2.75%. Royal Caribbean Cruise Line. Cruise lines have held up pretty well. Part of that strong discretionary group, 2.5% to the good. On the loser side of the board, Symantec down hard over 10%, as it seems that Avago might not be buying them now. XEC down 4.46%. Very bearish stock heading lower. Noble, NBL. If you recall last week on Tuesday, Noble was my bearish stock of the week. Down 4.3% yesterday and continues with a bearish rating. FANG, F-A-N-G, down nearly 4%. Energy names coming under pressure yesterday. Remember, we've been bearish on energy. IPG Photonics, IPGP, down nearly 4% on the day. That stock continues with a bearish rating. Taking a look at our earnings update now. It's earnings season. We'll bring this slide back into the presentation. Citigroup beat by 5 cents. Stock actually traded lower initially and then rallied to close near the high of the day. Wintrust Financial missed by 27 cents. That stock trading down here this morning. JBHT beat by 2 cents, and that was enough to send the stock higher here in pre-market trading. Before the open, we're going to hear from Goldman Sachs and JP Morgan, both with bullish ratings. JP Morgan looks like they beat, but the stock is trading lower. UAL after the close is a bullish stock. Neutral stocks reporting before the bell today: J&J, PLD, and WSC. Wells Fargo after the close: CSX, CTOS, and Schwab. Bearish stock before the close, before the open rather, FRC. Chaikin suggests caution when holding bearish stocks ahead of their earnings announcements. Taking a look at relative strength now. It's Tuesday. It's relative strength day. We look at all the sectors to see where the money is flowing, who's outperforming, who's underperforming. And technology is breaking out on a relative basis and an absolute basis. Here's XLK, tech sector, Spider Fund relative to the S&P 500. You can see it's been leadership. Went into a consolidation with the sell-off in May, and now we're breaking to the upside after that consolidation. Remember, we talked about the Qs at all-time highs. Here's tech breaking out on a relative basis. Notice that during the sell-off, the RSI did not become oversold and is now shifting back up into bullish ranges. We'd love to actually see it get overbought with this move higher. This is the RSI of the ratio, and on an absolute basis, a nice steady uptrend throughout 2019 with XLK trading at all-time highs. Discretionary, same story. Was leadership, went into this consolidation, now breaking up and out of that consolidation. A lot of this has to do with Amazon. Amazon has been on a good run of late, and it's a big weight in the index, or rather in the sector. We're looking at the Consumer Discretionary Select Sector Fund relative to the S&P 500, above the now rising 200-day moving average. Again, here too, notice, did not become oversold during the May pullback. Indicator now shifting into bullish ranges and actually did become overbought. Notice how on this slight pullback, didn't get much below 50 and now moves to an overbought condition. So what we say here is that momentum is confirming the price strength for this ratio. We would expect consumer discretionary to continue to be an outperformer. Now, I'll caveat that by saying it is a very broad group, and you do have to take your analysis to the industry level. But at the sector level, it's an outperformer on both an absolute basis and on a relative basis, similar to tech, a nice steady uptrend throughout 2019, moving to all-time highs. And finally, the one area of the market that bothers me the most, and the reason it bothers me is because if we look at the financials from a power bar perspective or a power bar ratio, it's consistently been one of the stronger power bar ratios within Chaikin Analytics. And when we look at the ratio of bullish stocks to bearish stocks. However, we need to see the market and model get into agreement, right? Similar to how we talk about stocks, we can say the same thing about the funds. The fundamentals are there, but the market's just not recognizing it at this time. If we look at the financials relative to the S&P 500, still in a downtrend below the 200-day moving average, despite this uptrend in price. Now, what's encouraging is this recent pullback did not produce an oversold condition. We want to see now if the RSI can begin to move higher. We're awaiting a price breakout. Maybe earnings for the banks is the catalyst for that breakout. It remains to be seen. But we have to ask the question, will earnings be a catalyst for the financials to take up a leadership role? That's going to wrap it up for today. Head over to chaikinanalytics.com/today to sign up for that email. Follow along with this show. I'll be back here tomorrow. Have a great day, everyone.